We look this morning at a market that actually is relatively calm, at least given the way people were following over the weekend this story we mentioned earlier about Secretary Mnuchin reaching out to the banks. What did you think the message of that statement was? Are you concerned about the president trying to replace Jerome Powell?
Yeah, I mean, there's no shortage of goofy news, over the course of the last week or so. You have the shutdown, you have the sort of odd and unexpected Mnuchin call, and of course, given that markets are down, there's no source for kind of a window dressing Santa rally. There may even be a little bit of tax selling. So in the short run, all of this contributes to potentially even a little bit more of a leg down this week. But
so because we're down because it's unusual for a December to be as bad as this one has been. I think this is the worst one since 1930 or something. So because it's been down, that makes it less likely we get that so-called Santa Claus rally?
Yeah, for another week or so. But then when we look into 2019, how can you not like sub 14 times PE? And remember, when people say, oh, well, that, average PEs are 14 or 15 or 16, but that's in the context of a 50-year average 10-year yield of over 6%. With this level of interest rates, I find it hard not to like a 13.7 times 2019 earnings.
Greg, are we going to look back and see this as a screaming buy opportunity?
Well, I think so. I think both in the stock market and in the bond market. I think there's wonderful buying opportunities out there. We've been active in the bond market, particularly buying credit here, but the markets haven't been very liquid for us this last week.
So that not being very liquid goes to one of the critiques we've had of the market lately, Greg. But it's interesting that people are so quick to blame the algorithms and to blame low liquidity. But stocks aren't supposed to go up every day. They are sometimes going to give you an opportunity to buy if you're disciplined and patient. And if you are, what are some of the things specifically that you think are attractive right now?
Yeah, markets don't move in straight lines. And this volatility, as a portfolio manager, volatility is our friend. So on the credit side, we've been trying to buy Dow. We bought short Puerto Rico, insured Puerto Rico paper last week. Iron Mountain on the high yield side. So we've been kind of nibbling in this market. We've found ideas.
Simeon, what about you? We mentioned this last week, but Facebook is trading, I think, now below 18 times forward earnings. And this is a company that's been growing revenues at, breathtaking speed. Yes, they have a lot of challenges, but what do you see in terms of buying opportunities these days?
Look, everything's a little bit on sale right now. Technology may have another leg down. You're still looking at double the price to book of the rest of the market. We've talked about this before, and there's a growing bandwagon on the EM front. I mean, you're 10 times earnings in emerging markets, and very interestingly now a 3% dividend yield. And
can you ever do well in emerging markets over time, though? I mean, if you don't get in and out of can you hang on to emerging markets for 5 or 10 or 15 years and make any money?
Yeah, if you're in for a full market cycle, you're going to get a little bit of a risk premium from the added volatility. But right now we're sitting at returns that are only half of the S&P since the financial crisis.
Oh, so that's why it feels like they've been just a dog in terms of giving you that risk.
The S&P is up about 350%, and emerging markets are up 175 from March of 2009. And as I said, even that 3% dividend yield is a little bit of a floor at this point.
Greg, speaking of dividend yield, the Journal today is highlighting that the dividend stocks have been the more reliable place to be in the market this year. Would you count on some dividend names for next year, or are you more interested in buying those good values you mentioned a moment ago?
So on the dividend, yeah, we think dividend, if you look at the stock market right now and add up dividends and stock repurchase, I think we're at about 4.6% in distributions to investors. So I think there's value there. We've been buying Nike and Starbucks in that's a little bit lower on the dividend side, but there's opportunity in pharmaceuticals. Absolutely.
You worried about a recession, Greg?
So we look at the second half of 2019 as an economic slowdown, but we're not using the R word. We'll see a slowdown, and actually the first quarter effect will probably take hold. We'll see a strong fourth quarter in 2018 with holiday shopping, and then which we think that'll be a catalyst for lower interest rates. We'll see the 10-year down below 2.5%.